Hey, what's up? Welcome to today's video. Today we're going to talk about why Murad is very bearish, saying that this is an absolute disaster for the Bitcoin price in the medium term, in his opinion. He's got an interesting analysis here looking about the global engagements of Bitcoin, how people are interested in Bitcoin, and uses actually tweets to measure the interest. And also we got on a different side, we got a more bullish TA by Jacob Canfield here that shares why he thinks the Bitcoin might go up from here. So we're going to cover two different point of views. And yeah, besides that, the market is just going sideways, just another day in crypto. In terms of the price is boring, but the fundamentals, like there's a lot of news that are happening today, kind of like the same as every day. But the price is really at the side still. Bitcoin at around $3,503. And yeah, let me see, we don't really have any altcoins that are pumping. We got some altcoins that are going down significantly, but nothing too special. So yeah, let's get started. My name is Dvir on the Cryptosphere. We make news videos on this channel every single day. And Murad here is sharing why he is very bearish. So basically, if you look at the amount of tweets that are mentioning Bitcoin, if you look at the historical chart, we are now back to the same level as 2014. So we're back 5 years in terms of dimensions of Bitcoin in tweets, and lower than at any point in 2016, like nothing has changed. So if you look at the chart, you can see that really the amount of tweets right now is very, very low. And again, this is not a black and white metric. Obviously, the Bitcoin tweets, it does give you an idea, but it's not entirely accurate, but it is a pretty good indicator to keep in mind. So he thinks that this is an absolute disaster. And he says here also that people aren't really interested in the technology that much, in privacy as much, decentralization as much. They mostly care about speculation and making money fast. They want to get rich fast. And that is just the nature of humans. You know, it's not necessarily a bad thing. It's just the way that people are. So he thinks that right now this bear market will last for much longer. Those that are building, learning, studying right now, of course, will be handsomely rewarded in the future. He thinks 2023 to 2024. Looks a bit too long for me, but who knows? And he thinks he says he will keep doing this until he dies. So he's kind of like, you know, going all in on this and saying that the bottom is not in yet. Yeah, I'll just say in terms of all the metrics, it does look pretty bearish. I know the $3,500 per Bitcoin does look very low, but in terms of when you look at the indicators, it looks like it's going to go even lower, which is, again, a great investment opportunity, right? This is not financial advice, but the price is going lower and the fundamentals keep improving, right? So it makes it more attractive to investors. Now, Jacob Canfield here shares an interesting analysis about Bitcoin and where we're going to go. So you can see here that we had this trend here a few times, and he thinks that we have the end of this falling wedge here and that we're here going to bottom at around 3,300, and then we're going to bounce up from here. Now, what he says also that was interesting is when you look on the 3-day TD9 for the fourth time, we're seeing a green buy. So in technical analysis, you can see here when you have 8 red flags in a row on the 3-day chart, and then you have the ninth one is a green one. Every time that happened in the last 3 times, you see this is the 4th time that this is happening, resulted in pretty big rallies for Bitcoin, going up 15 to 45%. So you see here, went up, here it went up, and then here it went up as well, although it didn't go by as much, right? So yeah, this is typically delivered 15 to 45% returns on average. So this looks pretty bullish, but he says in order for us to remain bullish though, we really need to hold the 200-day moving average. You can see it here. We're just above it right now, and if we break below it, this would be pretty bearish, right? So this is his opinion about why he is bullish as long as we maintain the 200-day moving average. I will say that those analyses do not necessarily contradict each other. It's just that he's talking here more on the short term, while Murad is talking more about the midterm. You know, when the technical indicators kind of turn bearish, you know, when the fundamentals like the amount of tweets or the NVT ratio, usually it takes more time for it to actually reflect in the Bitcoin price. So this technical analysis usually comes to fruition faster. Again, we don't know if necessarily any of them will be right. It's possible that both of them are wrong, right? Now, Hasu here talks about something interesting. We have Blockstream partnering with the Japanese fintech giant Digital Garage to bring a stablecoin for the Japanese yen, not the US dollar, but the Japanese yen, to the Bitcoin network. So it's going to be on Bitcoin. It's not going to be on Ethereum. So this Mao believes that it could be the first of many stablecoins native to blockchains Liquid. So this is on Bitcoin sidechain Liquid. It's not on Ethereum, and it's a stablecoin. So it's not pegged to the US dollar. And this is interesting to me because there's more to this than initially meets the eye, in my opinion. I think that when we look at this, we think like, oh, it's just another stablecoin. But actually, two things. First of all, it's not the US dollar, it's the Japanese yen. But the main thing here is that it's on Bitcoin. It's not on Ethereum. And this could be the beginning of Bitcoin taking one other use case from Ethereum to Bitcoin. Because right now, stablecoins were a good use case for tokens on Ethereum. But now, if Bitcoin is going to offer that as well, that takes one more advantage and competitive edge from Ethereum to Bitcoin, and another reason, I guess, for Bitcoin maximalists or for people that are skeptical of Ethereum. So this could be the beginning of a trend here, and I will watch to see if it happens more and more, if stablecoins will move from it, will choose, instead of launching on Ethereum, to move and choose Bitcoin from the beginning. Now, speaking of skepticism of Ethereum, we got here an interesting tweet by Grubbles. I don't know if he put it himself, but there's an interesting view of the entire Ethereum ecosystem as they're moving into proof of stake, the Beacon chain, proof of stake, sharding management, chain management, and it just shows very in depth like what it entitles to run Ethereum. Now, I didn't go into the details. The point here is not to go into the details, but the point is just to realize how complex Ethereum 2.0 with proof of stake and plasma and sharding is going to be. Like, I know that Vitalik is super smart. I know that there are smart people that are working on Ethereum, but you have to realize that we're not perfect, and complexity is not a good thing, especially when you're dealing with something that's so sensitive like money, where you cannot allow yourself to be so complex that it's harder and harder to make sure that there are no mistakes. Because if Ethereum has a security vulnerability, it's a very big deal, because we are talking here about digital currencies, right? So yeah, another concern of how complex this is. And they might solve this issue, they might run successfully, but it's not certain yet. Moving on, we got the ICO Kick. They raised almost 100 million 2 years ago, and now they're having issues with the SEC. And there's a footage of the CEO of Kick talking the ICO pre-sale, saying it will become super valuable. So basically, he was shielding his token to investors, and now that really doesn't look good for the SEC, and I feel bad for him, to be honest. So there's a video showing him talking about the potential of awesome returns if Keen's price rose, and pushing a detailed use case for it. And yeah, not an easy time, again, representing the ICOs and what happens to the SEC, right? Because they're going against the SEC right now. Now, we also have a pretty big article on Bloomberg called "The Cost of Dirty Money," saying that there is about up to $2 trillion a year in laundered money that people, dirty money, right? And CZ Binance talks about it, says, I guess simple math proves that crypto have nothing to do with it. I wouldn't say nothing, but it wouldn't have a lot to do with it. So the amount of money that is being money laundered is really just huge. It's like what, like 13 times, more than 13 times the total Bitcoin market cap, and more than like 18 times the total crypto market cap. So it's obviously not all related. Like the vast majority of money laundered money is not going through crypto, right? So that is pretty interesting just to go through it and see what's going on. Obviously, banks are at fault for a lot of it. Pretty cool research. Now, we got Alec here with an interesting tweet. And he says that Bitcoin, he talks here about the Bitcoin price and where Bitcoin, what it went through to reach where it is today and where it still has to go in the future. So Bitcoin going from $3,500 to $1 million per one Bitcoin is a lot less crazy than Bitcoin getting to $3,500 in the first place. Never estimate Bitcoin. And yes, I would argue that what Bitcoin did until now was actually the most difficult part, and then going forward from here is actually less difficult. in the beginning, it's really hard to get something like this going. But the fact that Bitcoin got already here was actually the most difficult part. I think that Bitcoin past is more challenging. Like the thing that it already went through are more challenging than the things it will have to go through. And as such, thinking that Bitcoin is going to go from 1 to N is much more easier and achievable than Bitcoin going from 0 to 1, from nothing to 3,500. If you read the book 0 to 1 by Peter Thiel, also talks about it. Great book, by the way. Also, we got here a really cool artwork of what is that? Bitcoin versus fiat currencies. I don't know. I see here a Hable is the trademark. But yeah, it's pretty cool. You can see here we got this big monster and Bitcoin going up against it. And it also has a bunch of tattoos here and the hodl, hodl, hodl tattoo. Pretty cool artwork. Definitely like it. Now, we got Justin Tron here pumping his BitTorrent token, starting with the pumping tweets. And then Mike Duda says, pump it, Justin, pump it. And Justin says here, never disappoints in that regard. He says there are 1 billion devices in the BitTorrent ecosystem. That's only 990 BitTorrent tokens per user. Cherish the BitTorrent token you have before it is too late. Hashtag BitTorrent, hashtag Tron. Love it. Pretty funny to see him shilling that token, right? Now, something very interesting that I saw, someone shared in one of my Telegram groups. He said that right now, the government pension fund in Japan, like the entire country's like pension fund, is reported a negative investment return of more than $135 billion. So they lost $135 billion for the October to December period. In 3 months, they lost this amount of money. Pretty huge, right? The biggest quarterly loss since it started putting pension money into the market in fiscal 2001. Again, whoopsie, right? Whoopsie, sorry about that. You know, your money, the money that we promised that we're going to take good care of, we're having some issues with it, right? So that is pretty scary, you know. I mean, that they are definitely losing a lot of money. That is a lot of money lost. That is more than $1 billion lost every single day for 90 days. So yeah, pretty interesting. And the entire pension ecosystem is an interesting situation because on one hand, people say, oh, you cannot trust people to manage their money, which I don't necessarily agree with. But then on the other hand, you got people that mismanage your money, you know, lose money in investment like that. Interesting situation, right? And then also we got another case of a 20-year-old Ohio resident that's been charged with stealing funds, with SIM swapping, hacking people. He only stole like about $10,000 in crypto, and now he's been charged with theft. So totally tragic, and it is sad. Now, finally, guys, if you'd like to become a better crypto investor, and if you'd like to learn how you can make understand the technology better and become a better cryptocurrency investor, I'm doing a webinar that's going to show you 7 secrets that you can use to master cryptocurrencies, investment strategies to outperform hodling, you know, technical analysis, buying and selling, like how to find good entry points and exit points for Bitcoin and the entire crypto market. So make sure to check it out. It's going to include some of the best material I came across in 2 years of doing this. And if I had access to this training, it would have saved me like tens of thousands of dollars when I got started 2 years ago. Not even kidding. So make sure to check it out. I'm going to share a lot of useful information. If you'd like to become a better investor and trader, then this training is for you. And I'm also going to give you a free mini course just if you attend, just for attending this webinar. So I'm going to share a lot of useful stuff. We're going to talk about Bitcoin versus altcoins and what separates the crypto millionaires that I met from people that sadly not made millions in crypto, but actually lost all their money and even went into debt. So make sure to check it out, link in the description. And if you enjoyed the video, please subscribe. And don't forget to tune in back tomorrow. Okay, much love. See you soon.